Right, so we are going to learn how to combine SLK and key levels. Yep, that's one. Well, from today, how to use the key levels to build bias and entering. Okay. So our topic will be or building bias and also using SLK. All right. So we'll move at key levels from the previous video. We have the A-shaped key level. They are used for sales until proving otherwise. Okay, come here. Expect price to come here and watch and sell down. But if price should break above this key level, it's the key level is still valid. Price will watch test to it, and then keep going up. Right. So this for A-shaped key level, but the primary objective of A-shaped key level is for sales until proving otherwise. Now, the same as V-shaped key level, that is for expect price to come to this level and go up and buy off until it's proving otherwise. Until it fails. Price will not give for sales on all sales. Right. So the same happens to open close. Same happens to open close. So those like how we learned how to identify fair value gaps. So that's how we can also learn how to identify open close. All right, this gap between these two consecutive candles is what is called open close. Okay, because at this specific price level, the let's say which kind of closed and this one opened. Okay, and this one opened, so you can consider that level as an open close because they kind of opened and the other closed at that price level. All right, so we have bearish and bullish open close. So this open close now, this open close is a bullish open close until price fails. Then you can use it for expect price to this is a bearish open and so this is a bearish open close. So you expect price to come to this level and go and sell. Or if we should break above here, just come out to it and do us and start going off. All right. Now, so how do you know that a key level is going to hold price? Okay, a key level is going to hold price. So from the name SLK, we have now identified the key levels. Okay, now structure is what also contributes to knowing the key level that is going to play out and liquidity, because we have SLK structure, liquidity, and key level. Okay, so what price tends to do is to attack liquidity and the balance and rebalance holding balance. Okay, so now if you want to know a key level that would, you have to consider one, structure. and most importantly, liquidity. Okay, most importantly, liquidity. So, let's move on. Let's move on. Move on. Let's have this liquidity. Let's go to let's talk construction first. Now, the basic market structure is what, let's say for a bullish market, it's for higher lows, higher lows. Okay, higher uh, higher lows. Now you see that whenever a higher high is taken, the market does what, pulls back. So these pullback are reversals, Why this new leg are the impulsive move. All right. So sometimes you see that the when market breaks a high, it's not actually best to keep by. Yes, yes. Market takes a high, you expect some pullback. Okay, you expect some pullback. What price does here is to come and take liquidity. Okay, price is to come and take liquidity inside of this place. You can call it internal range. Price comes here, create liquidity or original liquidity, and do what, and start going up. And when there's no original liquidity for price no original liquidity, it will take out this previous higher low and use it as liquidity and takes it out again when there's no, also like when price comes to a PRI, there's no inducement, there's no original liquidity. Price will likely trade below that POI or above that POI. Price will invalidate the POI. And sometimes you see that when price do something like that, it now reverse and starts going in your expected direction, because price now used that higher lower low as the liquidity. All right. So this does the basic market structure. Okay, if you flip it, because they can also use it for a bearish scenario. Okay. So this is just what price tends to do. So this is how you identify the environment you are in. You identify the environment you are in the market. So this is the basic structure of the forex, of the markets, of the financial markets, be it forex, crypto, or commodities, stocks, and the others. Okay. Now let me talk more liquidity. I will illustrate infinite liquidity and then engagement. Now let's say price is going up. All right. Can you hear me now? All right. Good one. Now, this price pulls back. Okay. Now let me do this one. Now price takes as this higher high. It pulls back. What price you do here is what? To come here and do what? Engineer liquidity. Engineer an internal high. You understand? Then takes out the liquidity that is here and do what? Create another and takes out the external high external range, internal range to external range. Okay, and it continues its thing. So this is what market does. This one, no, this one I explain on it in the liquidity. You know the quantity concept. Alright, so there's a big bigger picture. So it's to illustrate this. Now let's have something like this. Now this is my POI. This is my POI. So price comes to my POI and did something like it didn't tap the POI and starts going up. Now this is what to trap in impatient traders, early buyers. Because when they see that price is going up, price has left. Maybe it didn't tap to the period. They will just enter. Maybe around this level, they'll enter and price give them small profit. They put the stop losses here. They put the stop losses here. So price will just give them small profit and reverse and tap to the POI and clear the stop losses that are here. And what price will start going? It has taken the internal range. Internal range liquidity, not target the external range. Okay. This part was not liquidity. And this pattern is the let's do for the amount. Now this is engagement. Now price creates this something like this. It still goes up. Okay, let me pause it. Now you have this shape first. This let me mark out the POM first. Now have a POM and price is moving. So you expect price to tap the POI. Price came to the POI and it didn't tap. It starts going up. Starts going up. Starts going up. Now price comes back and taps to POI now. Now this way, just like I explained here, it has trapped early buyers. The stop losses are in, it has trapped them. And price because price has taken out this thing, the internal range liquidity, price the target the external range. Alright. So this for interest movements. Can you spot the difference between the liquidity and inducement? Inducement is like it has been there, but in liquidity is why price or also turning back stop here, ignored and trigged early buyers into buying. Okay. Okay. So sometimes you can have both inducement and it's not liquidity at the same POI. Yeah, it's possible. Let's say price is coming back, then it comes here. And sometimes you have it as almost the same level, equal lows. Okay, that also liquidity that will be taking. The price will do what? See coming, keep buying. Alright. Sometimes you have both inducement and liquidity at the same POI. Alright. Now combining this structure and key level, structure and liquidity. Now let's go back to key level again. Alright. Now take note of this. Price travels from key level to key level. You can build a bias. Your bias, your storyline, like your expectation where you are expecting price to go. Okay, for the week, for the month, for the day, for the um minutes. You understand? For the hour. So that's storyline. So you can build your storyline or bias using liquidity or key level. No, liquidity is using CRT. Okay. I will explain CRT. CRT is when price takes a down low, then expect price to come for the high. Alright. Then you build the bias using key level. So that means you're expecting price to travel from one key level to the other. Okay. So but you can still combine it too. That way it gets interesting. You can still combine key level and liquidity. Yes. So you also use key level. You also use key level and liquidity to do what, to build your entry. So yeah, this thing is in two parts. One is building bias, and the other one is building entry. All right. So if I use key level and CRT to build bias and entry. Now let me do some sketch on them building bias using CRT. That's liquidating. I hope you are following. Now let's say this is a candle, this is a weekly candle. Now this is another candle. This is another candle. Now this is the low of this candle. This previous candle. This is the low. Okay. Now also I have to say is that if this next candle should come and do it and sweep. Now this is not a sweep. This is not a sweep. A sweep, it must close above the wick of the previous candle. Okay, this is a sweep. This is a sweep. All right. So this candle also has wick. So if price should do something like this, then you know that price is still going to come and take the high of this previous candle. Alright. Price to come to take the high of the previous candle. Okay. Now this is CRT for you. So if you are with your friend, you can just this. Now CRT theory states that when a candle low or high is taken, price is going for the high or the low. When a candle low is taken, low or high is taken, price is going for the high or the low of that particular candle. Alright, so that's just the basics of CRT, and it works like magic. It works like magic. Okay, when there's only CRT for you, you can play CRT from higher time frame like the monthly, weekly, daily. Okay, when the previous day low is taken or the previous day high is taken, then you expect price to come and take the high or low of that candle. Alright. So but when you add entry, how you when you build your entry, that's when you now join the trend. You now ride with the markets to take out the high if the low is taken. Okay, now this is a building bias using charity. But let's look at building bias using key level. Okay, now we have, let's say, a V-shaped key level. Have a V-shaped key level. Okay. Then price pulls back to this key level here. Now, what you should understand is candle close. Okay. Now you can be waiting on this period and for price to come and tap here and start buying. But when price comes in, all we'll do is come and trade below this trade level. But know that what you should wait for is for this candle to close. So this candle can come as low as here and reject with a wick and close below and close above this period. It's a key level. It rejects. So weak rejection don't count in key level. That's why we use a line chart. Okay, if you watch the previous video, see that I explained that I talked on line chart. Okay, talk on line chart that I use line chart to reduce noise, candle wicks. Okay, so it's best spotting key level is best by using line chart. All right. So now this when price taps a POI like this, key level like what you should take note of is the candle closure, not the wicks. Candle closure. All right. So and also on key level, we take note of candle rejection. How candle rejected from a key level? How candle rejected from a key level? Okay, I would like to say something more on building bias using two levels. Alright. Now let's say you have this A-shaped key level that was disrespected. The price is supposed to come in. Price broke above this key level. Okay. And push back to this key level. Now, looking at it, please now we now have two key levels. Right? We now have two key levels. So we have this disrespected A-shaped level and what have another A-shaped key level here that is above. So price can do what? Come to this key level that was first disrespected and tap to it and come to this key level. Okay, price might destroy it. Okay, keep going, but this is like a resistance for it. This should be a target. So you move price from key level towards to key level. Move price from key level towards to key level. Okay, and key levels you don't necessarily need CRT like wait for the load to be taken. What you need is for price to reject from that POI, from that key level you are looking to trade from. Okay, now with this now we go to the line chart and then build our bias first. Okay, so we are going to build our bias with with CRT by Liquidity. Then we now use serials. Then afterwards we can now combine the two. Okay, let's say we have a case where there's no CRT and there's key level. Okay, you can combine it in a way that let's say you're meant to be using one, we're going to be using one concept. Okay. But you can also combine the two and use at the same time. So you look into that. Now let's go to the charts. And then we use USD. So we go to this week. Yeah, what my opening about chart. Now on TRT, translation to this. See this candle. The high one was taken. This is the daily. This is the daily. The time frame. The price was made its way to take the low of that particular candle. Okay. Now see another one here. The high of this candle was taken. Price targeted was the low. Can you see that? This is just CLT or UA play. Alright. Now let's look at now this is I took this trade. Now this you can see what I did there. Let's see what I did there. I marked the can you see that high? How see can you see this header is marked because what price took the low. Okay, price took the low and price and my expected price was to come and take the high also, which price already did. Can you see how beautiful this thing plays out? Okay, now how I got my entry is what I'll still tell you guys. Okay, it's not far from here, from where we are, because the main thing now is to get to know where price is going. Okay, once you know where price is coming from and where it's going to, you'll solve like 80% of your technicals. Because you sometimes you'll be like, when you're in market, you'll be seen by on the same page, you see, sir, you'll be confused, you know. But when you know how to beat your buyers, you'll not be confused about where prices go to. Yeah, so you can see liquidity now. I see how it's in play. See how it's in place. Okay. Now, just like from the example I gave before we came here, you can see that this is a disrespected one. This is a disrespected A shaky level. This one. Now let's get the line chart. Look on the line chart, but see that this is an A shaky level. Beautiful. This is an A shaky level. So this A shaky level was disrespected Italian plus. I think the candle, the breakout candle. This candle, the candle that disrespects a POI or a key level is called a breakout candle. You can see that. You can see how price disrespected this key level here. This breakout candle. And what the price do. That's why I tell you that from this key level, you expect price to play from key level to key level. You can see that you have this H-shaped key level here, and we have this H-shaped key level that is here also. Okay, so this is where price is coming from. This is okay. This is where price is coming from. It's going to this key level that is down here. You can see how price starts to that key level to which are rejected above. Alright. So price travels from key level to key level. Okay. So now we can see what happened there. And price has already gone to that key level that is up there. Are you sure how beautiful this is? Okay, so you are still on building bias. So I'll give one more example on I'll give one more example using key level. Now looking at this place now, I see that open close. You guys see the open close, right? Open close that are used for it depends whether it's a bullish upper close or a bearish close. Now have this upper close. Okay, we have this upper close here. The gap between these two consecutive candles. You can see that we price see the rejection. See the rejection of these candles on this period. Can you see that the rejection of these candles is beautiful? Okay. Now you can see that we also have not far from there. We also have this key level here. This V-shaped key level. So you'll be wondering why the price use this auto close and not this V-shaped key level. That's where liquidity comes in. Okay, price tends to use a POI or a key level that has liquidity nearest to it. Okay. You can see this inducement here. If you go to the 4 hours of the 1 hour, and you'll be confused like that. You can see that this is an adjustment, right? This is an adjustment. And price played from that upper close. Just like I said, price move from key level to key level. So it taps from that upper close and waits to the A-shaped key level that is there. The price disrespected the A-shaped and came and created another A-shaped key level. Price returned to the previous A-shape, tapped there and start going Yeah, you can see, it's very similar how this is going. Okay, and see, it's beautiful. It's beautiful. Now, the reason I say if I'm combine CRT and key level in building balance is because you see that when price came to the POI, maybe you'll be expecting this candle to sweep the low, but it didn't sweep. But from the rejection here, you can see that you can start considering the price is going up immediately. Now, you can see here now, price came to this POI, tapped, rejected, took out the low of this one, took out the low of this candle here. So this price is